Good afternoon, everyone. Welcome to Questrade's webinar series. Thank you so much for joining us. My name is John, and I'm your host from the Questrade education team. And joining me shortly is our very special guest and presenter from OptionsPlay. But before we get started, let's quickly go through an important disclaimer for the event. And here's our disclaimer. Now, please remember that the information conveyed in this webinar is for educational and informational purposes only and does not constitute advice or recommendations by Questrade. All right, moving on. I'd like to welcome our special guest from OptionsPlay to the call, Tony Zhang, for a quick intro before we go through how to enable options trading in your account and get to the meat of the presentation. Tony is the Chief Strategy Officer and co-founder of OptionsPlay with over 16 years of experience as a market strategist in equities, FX, and derivatives. Over the last 10 years, he's built OptionsPlay into a global financial services data platform, powering some of the world's largest banks, brokerages, wealth management firms, and global exchanges. You can also see Tony as a regular guest on TV, on CNBC's Options Action Show, where he discusses popular options trading techniques and helps to demystify this crucial corner of the market. We're very excited to have him here to present, and with that, I'd like to pass it off for the quick intro.
Really excited to kind of walk you guys through the OptionsPlay platform and show you some of the ways you can use it for your own options trading.
Before we jump into the meat of the presentation, I just quickly wanted to take the audience through how to enable options trading in your account if you haven't already done so. Now, if you're a seasoned options trader, you've probably already done this ages ago, but if you're just getting into options or would like to graduate from level 1 and 2 strategies to higher level strategies, this is how you do so. Simply log into your account and select account management and then account management again. And then about halfway down the page in your account preferences, you'll see the option level. This is where you can just hit the pencil icon, change that from level 1 to 2, 3, or 4. Just keep in mind that level 3 and 4 are only available in margin accounts and may have equity requirements. So that's about it, fairly straightforward. And then once you change your options level, that change will take place the next business day for trading. So that's about it. Don't want to take away too much from Tony's presentation, and I'll hand it right back over for him to take us through the platform. Thank you again, everyone.
Perfect. So let's start off by talking a little bit about the options chain, because this is where options data starts, right? You have your options. Anyone who's traded options before is probably familiar with viewing a page like this, where you have your calls on the left, puts on the right, and you have a listing of all the different expiration dates and all the different strike prices within each expiration date. And the challenge that you have as an options trader is that there's quite a bit of a learning curve to, first of all, help you understand what data points are even available on this page. But more importantly, there's a lot of work that's required to figure out if you have a bullish view on a stock or a bearish view on the stock. Number one, out of the dozens of strategies that you can trade, which one might be suited for the specific outlook that you have on the underlying security? Then you have to figure out what is the right expiration date and strike price to choose with that specific option structure. And there's a lot of work that's involved in, number one, learning how to go about doing so. And then more importantly, once you actually have access to the, once you kind of have that knowledge, it's quite a bit of work to actually manually go through an options chain looking for the specific strategy, looking for the right expiration date and strike price. And then even if you do all of that work, the hardest part is the fact that, using a page like this, I have from my, nearly 18 years of trading experience with options, I have a pretty good idea of what strategy I'm going to trade, what expiration dates and strike price. I can navigate this page pretty quickly. However, even if I can hone in on what type of strategy I want to trade, what expiration date and what strike price, it's really difficult looking at a page like this to get a good sense for, if the stock moves in the direction that I expect it to, how much money would I potentially make on that specific strategy, and vice versa. What if the outlook that I have on the underlying security doesn't work out? How much do I have to lose? How much do I have to risk? And that's what the options chain, unfortunately, cannot do for you. So this is really kind of why we started the OptionsPlay platform, is because we wanted to build the tool that helps us as traders, number one, be more consistent in the way that we structure our trades based on the best practices that we apply for our own trading, so that we have technology to help us structure trades for the specific outlooks that we might have on a security. But more importantly, giving us the tools to fine tune those strategies. Sometimes you might find you might be a little bit more bullish or a little bit less bullish. And more importantly, helping you understand what your expected P&L would be if the trade goes in the favor that you expect it to, and more importantly, what happens if the trade doesn't go in the direction that you expect it to. How do you know how much you have at risk? Those are really important questions to know the answers to before you execute a trade. If you're trying to answer those questions after you've placed a trade, unfortunately, that's too late. A lot of times I see traders kind of ask those questions after they place the trade, and after a trade kind of has already played out. The expected outcome that they have wasn't what they had in their head, and this is really some of the problems that we're trying to solve with the OptionsPlay platform. So today, what I want to do is give you a full walkthrough of the tools that you have access to here at Questrade, how to utilize it for your own options trading, and how to kind of significantly reduce the amount of time it takes for you to research idea, analyze it, and potentially execute it in your Questrade account. So to access the OptionsPlay tool, you click on the research tab here this is the Edge web platform. If you click on the research platform here on the left-hand corner of your screen, you'll be able to access the OptionsPlay tool here on the upper left-hand corner. Now, the platform itself is divided into three sections. You have trade ideas and watch lists here on the left-hand side of your screen. You have your security analysis panel here on the right-hand side of in the middle panel. And then we have trading and income here on the right-hand side of your screen. And the goal here is to help you, we call these three panels the what, the why, and the how, meaning what symbols should you pay attention to start your day? Why should you pay attention to it? And then how should you structure an options trade on the back of that? So when we look at, how to start, right? Idea generation is at the core of what we help you do here with the OptionsPlay platform. And what you have is the ability to sort our trade ideas based on bullish or bearish views on the underlying market. And you can even sort and filter based on things like market cap, what sectors you want to look at, and what technical scans you want to utilize in these specific ideas. But I'll keep things simple, and what I'll do is I'll look at what I'll do is I'll take a look at the markets right now, and I see that, the S&P just broke out to new all-time highs, but you see that the NASDAQ 100 is struggling to reach all-time highs. The Russell 2000 has kind of reached recent all-time highs and been rejected off of that. Perhaps that's a sign that there could be some downside going into the U.S. election. So maybe just for today's purposes, and again, this is purely for education. This is by no means advice on my views here for the page. And I'm looking at the markets right now. It's looking, and again, this is just purely for education purposes. This is not advice. I'm looking at the markets and I'm thinking maybe I want to take a look at some bearish ideas right now, given the fact that the markets are struggling near some major resistance levels. And, we're seeing earnings coming in a little softer than expected. So I'm going to take a look at some bearish ideas, and you can quickly screen the ideas list based on the bearish ideas. And one of the things I'm going to do is I'm going to filter out small cap and medium cap stocks for now, just because generally speaking, when you're trading options, you generally want to trade options on more liquid names, and those are going to be generally your large cap, mega cap stocks. So that's a great way to kind of get a sense for filtering out some of the noise, if you will. And as you can see, that brought me down from over 100 ideas down to just 11 ideas. This is one quick way to screen the overall ideas. And one of the things I also like to do is I like to sort the list of ideas based on relative strength. And what that gives me a good sense for are what are some of the weakest stocks in the market and what are some of the strongest stocks in the market. And as you can see, out of all of the bearish names, they all have a score of either 3, 2, or 1. So these are all pretty weak stocks in the overall market. And looking at this list, I'm just looking at this particular list. I'm going to look at Fedex here for a second because, I'm looking at Fedex because I'm a little concerned about just the health of the US consumer and what that has to do for e-commerce. We've seen consumer discretionary as a sector start to underperform the overall markets here over the past few weeks. And there's concerns that perhaps e-commerce and just kind of the packages that are being sent out through e-commerce is starting to get a little softer in terms of volume. And as you can see, this is the chart here for FedEx. It clearly has been trending lower here over the past few months, despite the fact that the S&P 500 is making new all-time highs. That in itself is probably a bit of a signal in itself. And then as you can see, FedEx is also struggling with this 280, 275 resistance level of prior support, turning into resistance as well. And it's recently triggered a sell signal here on our platform. So this is just one idea. I just took a look at this, a few minutes before this show, and wanted to take a look at what if I thought FedEx was going to continue to decline here. What is my view here? What can I do to structure a bearish view here on FedEx? And this is a prime example of utilizing options, because when you have a bullish view on a stock, you can buy the stock, you can buy a call option, you can buy different vertical spreads. But when you have a bearish view on an option, I'm sorry, when you have a bearish view on a stock, number one, I'm not a fan of shorting the stock, simply because of we all saw what happened with GameStop a couple of years ago. When you're short a stock, you have unlimited risk. I don't like taking a bearish position in a stock and be in a position where I can take on unlimited risk. I much prefer utilizing an option structure to take a bearish view. This way I can take my bearish view, but do so in a way with limited risk. And that's really kind of where I turn to my trading tab here on the right-hand side. This tool allows me to structure a bearish trade, a bullish, bearish, or a high implied volatility. This is kind of where you're selling options in a high implied volatility environment. We'll cover that here in 1 second, but allowing me to structure an options trade instantly by just selecting a symbol and my outlook on the underlying stock. So in this particular call, so in this particular screen, here, I'll zoom in a little bit more here. Hopefully that gives it a little easier for everyone to see. So in this particular case, I've selected I'm bearish because this is looking at a bearish screen here on FedEx. And what that allows me to do is take a look at 3 strategies that would allow me to take a bearish view here on FedEx. So what it's always going to do is show you the equity trade. So for those of you that are only trading equities today, it gives you the equity option for taking a bearish view, which is shorting the stock. Now, like I said, that's a strategy that I will never trade personally because of the fact that it has unlimited risk. But it gives you a good way to compare, if you were trading equities, what that looks like relative to if you're trading options. And then what it'll give me is a simple option strategy, buying a put option. And if any of you here have a basic understanding of options, you probably have come across a put option before as a bearish strategy for an underlying security. And what it does is it allows you to compare shorting the stock to buying a put option. And then what it will do is it'll give you a third option, a more advanced strategy. And this is for those of you that have graduated from buying calls and puts, and you recognize that there are some significant limitations to buying a call or a put. And that's largely the amount of risk that you're taking when you're buying a call or a put, and how far the stock has to move before those strategies are profitable. And then what we have built is a set of tools to help you navigate these 3 strategies side by side, compare them side by side, and understand each one before you decide which one's the right strategy for you. Okay, so I'm going to look at here at FedEx, right? And I'm looking at FedEx, and as you can see, the prior low here is around 254. The lows before that is around 243. So maybe that would be what I would that's what I would be shooting for in terms of a downside target if FedEx does start to trade lower here to the downside. So as you can see, one of the things that OptionsPlay does when I click on I'm bearish on Fedex is that it's selected for me not only a put option, but it selects for me the expiration date and strike prices for both the put option and the put vertical spread. And again, what this is designed to do is so that you don't have to pull up an options chain, remember what the best practices are that you might have learned for each of these strategies, and figure out which one of the options chains you want to choose from for an expiration date, a strike price, a strategy, and then even more importantly, even if you knew how to do all of that, one of the things that the options chain cannot do is tell you how much money would you make if the outlook that you have on the underlying stock does play out. So in this particular example, I'm saying what happens if I'm going to use the P&L simulator at the bottom of your screen, of my screen, which will now allow me to compare these three strategies and say, what happens if FedEx reaches the $243 downside target that I'm thinking it's going to get to? So if I shorted the stock, I'm looking at about a 10% return by shorting the stock. Not a bad outcome for being right on my bearish view here for the underlying security. However, as you can see, if I had bought this put option here where I paid $1,800, that's my total risk on the trade, my return on an investment would be 101%. So out of $1,800, $1,835 that I'm risking, I'm going to make $1,865, about 100% return on my investment. And then if I look at the strategy on my right-hand side, I'm risking 1485 to make 2215. Now, these are numbers based on expiration, meaning if the stock is at 243 at expiration, these would be this would be my return expectations if FedEx is at 243 by that December 20th expiration. And as you can see, now I know exactly how much I can potentially make on the trade. And those are important decisions to make, important numbers to understand to make that decision as to whether this is a trade that I want to place or not. You know, if let's say in an alternative scenario, what if I thought the stock was only going to reach 254? Let's take a look at a different scenario. The previous low is 254. So what if I'm a little more conservative and I'm thinking that if this goes down, it's only going to reach 254. Let's take a look at what things look like. Now my return on the short stock is about 6%, but put option is 41%, and my vertical spread here is 75%. Now 75% is pretty good, but maybe for me that might not be enough. And this is how you make that decision as to whether a strategy makes sense for you. But more importantly, I think that a lot of traders tend to focus on how much money can I make, not enough on how much money do I have at risk. But that's really arguably more important, because what if FedEx breaks back above this resistance level? I'm thinking that 275 is a resistance level, but what happens if it breaks back above? It's got a gap all the way up here around 295. What if it just breaks out above that and fills the gap, right? So it's important for me to also understand, in a worst case scenario, how much do I have to lose? If I had shorted the stock, I'm going to lose $2,481. That's a lot that I'm potentially risking, depending on the size of your portfolio. If I bought the put option, I'm risking $1,800. If I bought the put spread, I'm only risking $1,400. So the goal here is to help you understand not only how much can you potentially make if you're right, but more importantly, how much do you have at risk if this does not go in the direction that you expected to. Far more important when it comes to trading options is to understand your potential risk to reward to help you make that trading decision. And one other thing that I think is really important to understand that this tool does, which is our risk and investment calculator. And this is for those of you that have ever found yourself in a position where you've placed a trade, and after you've placed a trade, you say to yourself, I lost way too much money on that trade. Because if you are ever in a position and you're saying that I've lost too much money on a trade, there's only one thing you can blame, and that's yourself for trading way too many contracts, meaning exceeding the amount of contracts that is suitable for your portfolio. You can't blame the trade. You can't blame your outlook on the trade. You can't blame on who gave you the idea. The only person that has control over how many contracts you trade is yourself. And that's a hard thing to listen to, but but that's the truth. And I've been a strategist for 18 years, and I've worked with thousands of retail and institutional traders. And the one truth that most traders don't want to face is taking responsibility for the number of contracts that they trade, which is why we built the risk and investment calculator. And I encourage every single investor, every single time you place a trade, to use that tool. It is arguably the single most valuable tool to prevent you from blowing up your account. And what you generally want to do is risk roughly 2% of your total account value in any single trade. And any single trade should never exceed 2% of your total account value. So if you have a $100,000 portfolio, you shouldn't risk more than $2,000 on a trade. If, let's say, you have a $500,000 portfolio, you should never risk more than $10,000 on a trade. But our tool will calculate for you the appropriate number of contracts based on your risk tolerance, so that you should never be in a position where after you place a trade, you find yourself saying, I lost too much money on the trade. Because if you use the risk and investment calculator, you'll see that the max risk on the specific trade that we've calculated for you will not exceed the maximum risk that you have stated in the risk and investment calculator. And the goal here is that even in strategies with unlimited risk, we're still calculating your 2 standard deviation risk and sizing it appropriately, so that even if you're trading a strategy that has unlimited risk, which again, I generally don't recommend that you do, but if you do, selling 37 shares of the underlying stock will result in roughly $10,000 worth of risk if the stock moves 2 standard deviations against you. So we're kind of calculating all of these different probabilities and odds to help you understand how to avoid taking big losses in your portfolio, because I know many of you here today that are trading options have probably in some time in your history come across where you've lost too much, quote unquote, lost too much money on a specific trade. And it really all comes down to trading too many contracts, more contracts than you probably should have in your underlying portfolio. And if you have, put up a big thumbs up in the reaction down below if you found yourself in that position where you've lost too much money on a trade because you've simply traded too many contracts. We've all been there, and this is some of the tools that we have built to help you overcome some of those habits. And it's something that's incredibly important, and it's something I teach extensively on, which is some of the things that you can do to help avoid that. Okay. So our tools are designed to help you, number one, fully understand what your potential reward is versus potential loss. So for any symbol that you type in, I'm looking at Fedex here. I'm looking at a bearish idea that our platform scanned for during today, a bearish Fedex trade. I've structured some bearish trade ideas. I have a good sense for, if I have a view, I'm going to look at kind of trading this vertical spread here on the right. So if you are, let's say, trading for the first time and you want to trade with something simple, or maybe you only have access to trading level 1 or level 2 options, and you can only trade single leg, click on the preview order button, and that will give you access to a strategy checklist, which will kind of look at the trends of the stock versus the trends of the market, and making sure that you're kind of aligning yourself to a few different things, making sure that there are no earnings between now and expiration, an important metric to be aware of, and also just liquidity of the option. So kind of making sure that you are familiar with the checklist before you click on buy or sell. And what that does is it actually pre-populates the order ticket for you here at Questrade. This way, you don't have to enter the order ticket manually. It already has everything, the December 280 put options already put in there. You can click on the ask price to pre-fill your order ticket into the limit window and click on buy, and you can send this order off for execution. So this is designed to help you quickly enter your order very efficiently based on the orders that you have staged or the orders that you have analyzed using the OptionsPlay platform. Okay, so that is something that you can do for any stock, whether it's a stock that you found using a trade idea that our platform has given you, or if you just simply have an idea on your own. Let's say you're looking at Tesla and you're thinking to yourself that things are really falling apart there. So you can type in any symbol. And either in the trading tab, you can click on I'm bullish or I'm bearish. So for example, if let's say you want to take a contrarian view, you think Tesla is going to turn things around, you click on I'm bullish. You can see the three bullish strategies here side by side. You can model out what happens. You think, okay, the stock's going to hit 263, by December. How much can you potentially make? And you can see, okay, I can make a 225% return by buying this call spread versus 151% return buying a call option, or a 21% return buying the stock itself. You can compare these three strategies side by side. And then more importantly, what happens if the stock doesn't go in the direction you expect it to? How much do you have to risk if you bought the stock versus the call option versus the call spread? And then once you've kind of made your trading decision, being able to click on that preview button, buy and sell, and being able to enter this order very quickly into your into your Questrade platform and send this off for execution. So this is really kind of at the core of what the OptionsPlay platform allows you to do if you want to take a directional view here in the markets. Now, for those of you that like to sell options for premium, let's start off by looking at some of the strategies, the more advanced strategies, and then what we'll do is we'll kind of go back to some of the basics of the cover calls and cash secured puts. So for those of you that have more of a advanced understanding of options and you're selling options for premium, whether you're doing strategies like selling a straddle, advanced strategies like selling a straddle or an iron condor, or if you're selling things like credit spreads, the OptionsPlay platform will do the same thing. A lot of you are fans of selling credit spread. I've talked to many of you over the years. What this does is it helps you structure a bullish or bearish credit spread instantly on any underlying stock. So for example, if I'm looking at Tesla, maybe I have a neutral to bearish view on Tesla, meaning I don't have an outright bearish view. I don't think the stock's going to fall apart, but I think the stock may be slowly grinding its way lower. And that's kind of might be the right environment for selling some premium here for Tesla. So I can click on the high implied volatility option here on the right and look at selling a bearish credit spread. And it will structure the strategy for me, the expiration date, the strike prices are already picked for me, and I can basically look at what happens if the stock moves lower. Let's say it reaches $200. How much can I potentially make versus what happens if it goes back to 250? How much can I potentially lose? Understand my risk reward on the trade before I click on that trade button. And more importantly, use my risk investment calculator to say, I'm willing to risk $3,000 on this trade, calculate for me the number of contracts. So it's telling me I can only sell one contract. That helps me stay in my lane so that I don't, force trading 2 or 3 contracts and then eventually down the line potentially coming back and saying, wow, I should not have traded 2 to 3 contracts because now my losses have exceeded what I'm comfortable with in my overall account. So that's really kind of at the core of what OptionsPlay can do for you. It'll help you find options trades for the outlook that you have on an underlying stock, whether it's a stock that you found using our idea generation tool or it's a stock that you have found on your own. Our goal is to help you instantly structure an options trade regardless of what your views are, help you make your decisions as to understanding your potential risk to reward on the underlying trade, and then helping you calculate the appropriate number of contracts so that you can click on that preview button and send this off for execution in your Questrade account. And that's for those of you that are traders. Now, many of you like to generate income, and many of you sell cover calls in your portfolio. So one of the things that we built was a way to help you quickly identify cover call opportunities on stocks that you might own. I'm going to take a look at, let's say, Apple, right? I'm going to use Apple just because so many of you have Apple and many of you probably have 100 shares of Apple in your portfolio. And maybe you want to look at selling cover calls. Well, one of the things that we do here for you is that when it comes to selling cover calls, we tend to find that everyone sort of has their own preferences as to how far out they like to go, how conservative or aggressive they like to be when they're selling their strike prices. One of the things that I can tell you is that based on our research, you generally want to take a more conservative approach to your risk tolerance and how you select your strike prices, but you might want to choose a short or a medium dated option when it comes to your time frame, and you can save this as default. And what OptionsPlay will do is for any stock that you type in, we will find you the cover call that matches your income settings. So for example, when I click on IBM, it's trading at 232. The December 20th 260 cover call is that medium-term conservative strike price. And it gives me all of the relevant information that I need to understand the strategy. So if you're selling a cover call for the first time, it'll explain to you selling that December 260 call will generate $188 worth of income. You can also adjust the number of shares. Let's say you own 300 shares of IBM. It will automatically tell you how much income you're going to generate for the appropriate number of shares that you have. It'll tell you the yield that you have and the number of days and what that annualizes out to. And it'll actually compare it to the dividend yield as well. So I'm going to generate about 5.6% annualized on this cover call. I'm currently earning about 2.8% from a dividend yield. So I'm nearly doubling the dividend yield, nearly doubling the income that I'm receiving on this specific trade using this cover call. And it gives me all of this information that I need to understand what's my probability of this call option expiring worthless, what's my 12-month projected yield, what's my break-even price, how many days to expiration, all of that information that I need to make that trading decision if I'm selling that cover call, allowing me to click on the preview button and being able to go through that checklist and entering this order very quickly by clicking on the bid price and potentially selling this cover call on my portfolio. So this is all designed to help you quickly do that research for selling cover calls with any stock that you might own in your portfolio, calculating all of the information that you would need in order to make that trading decision, and then being able to enter that order very quickly. And very quickly, for those of you that perhaps sell cash secured puts, let's say you want to acquire IBM. And this is the number one most underutilized option strategy, in my opinion, by most traders, especially equity investors. If you're investing in stocks and ETFs in your portfolio, most people don't think of short puts as a way to help you acquire stocks at a discount. You might be familiar with selling cover calls to help you generate income to sell that stock in the future, but you don't think about short puts as a way to acquire the stock at a discount. And many times you might be surprised at how much of a discount you might be receiving selling a cash secured put versus a limit order. So, if you want to learn more about the strategy, I highly recommend that you do. But this tool will also help you identify opportunities to basically acquire the stocks and ETFs that you are interested in buying at a significant discount by selling that put option. As you can see, if I sold the put option to buy IBM at 255, instead of placing a limit order at 255, and I'm not trying to compare the two strategies apples to apples, there are some differences between the two, but in terms of the obligations, it's the same. When I sell a 255 put, I have the same obligations as I do if I place a limit order at 255. But the difference is that if I place a limit order at 255 to buy 100 shares, I don't get paid anything. But if I sell that same put option at 255, I have the same obligation, but I'm going to get paid $655 per 100 shares. That's a 3% discount on the stock purchase of IBM. So imagine if you can get a 3% discount on the next stock purchase that you make. What would that do in terms of your overall returns in the underlying investment? Those are some significant numbers to look at. And IBM is a pretty, I would say, mild one. If you look at some of the more volatile stocks, you can get 5, 7, 10% discounts on your stock purchases using a short put. So one of the most underutilized strategies that I recommend if you are an equity investor to take a look at that specific strategy. And this tool basically allows you to quickly type in any symbol, any stock that you're interested in acquiring. Let's say you're looking at, I'm just going to pick a random stock like Bristol Myers. If you look at Bristol Myers, it'll tell me that if I am interested in acquiring the stock, I can generate $199 worth of income for every 100 shares. And that's a nearly 4% discount on the stock. So just typing in a symbol, you can quickly see where can I sell put options to generate some income. And this is a strategy for stocks that you want to acquire. And once you are honed in on a strategy that you're interested in, clicking on the preview order button will allow you to enter this trade trade into your platform, click on the bid price, click on sell, and now you've entered that trade into your platform. So trying to shortcut your experience for researching, making sure you have all the relevant metrics at your fingertips without having to plug it into a specific tool and find the analysis. Everything is designed here for you, and then giving you the tools to be able to execute that trade directly into your Questrade account. So with that, that covers what I wanted to share with you here today. Hopefully this gives you a good understanding of or an overview of the different tools that you have available here at Questrade through your options trade account, and gives you some food for thought as far as how you can utilize this platform to help you find your next trade, and more importantly, understand your trade from a risk perspective before you place that trade.
That's perfect. Thank you so much, Tony. We really, really appreciate your time today and that fantastic presentation. I'm still learning something every time I get to attend one of your webinars as the host here, so I hope the audience was able to take away a few really great key ideas from that. And even the OptionsPlay platform itself, there's so many cool features that are underutilized by a lot of investors. So thank you for taking the time to do that deep dive there. So with that, we'd love to move into our live Q&A portion here. We've got a lot of questions from the audience that we've been trying to address as quickly as we can throughout the presentation, but there's a couple of really great ones here for Tony. So maybe we'll start off with one that has come up a couple of times, and that is about the strength of these different options ideas in the left-hand column. And let me jump back so we can see your screen as well. Let's do that there. So on the left-hand side where we see the strength, right now I see a lot of twos and threes. Do you mind elaborating on that a little bit more, Tony? Like what makes a good strength, where that number maybe comes from on the options play side? What can you tell us about that?
Yeah, let's turn over the watch list. I think that's a great way sometimes to understand strength. And we'll give this a second to load up so we can see all the strengths. But the strength is really looking at, it ranks all stocks and ETFs on a score of 1 to 10. 10 are the strongest stocks in the market, 1 are the weakest stocks in the market. Usually think about trends of a stock, right? And what the trend tells you is how the stock is performing relative to its own history. But a lot of times when you're looking at stocks, you want to know how is that stock compared to all other stocks in the universe of stocks, and that's really kind of where the relative strength comes in. So, for example, let me do this. Let me remove some of these filters, right? So, as you can see, when you look at strength here, what it does tells you is kind of what are the strongest stocks in the market and what are the weakest stocks in the market. And as you can see, there are hundreds of ideas here. So there's lots of them. So, okay, so here we go. You got some scores that have a score of 9. So let's take a look at this particular stock, right? And you'll see that, the stock, overall, as you can see, is a relatively strong stock. It's certainly recently turning bearish, but overall, over the past year or so, it's performing or outperforming the market. This was a $6 stock, that is nearly a $50 stock, at just a couple of months ago. So this is kind of how we determine as this is a relatively strong stock, but notice how the trends have turned bearish. So this is a strong stock turning bearish. Now, if we look at a stock that has a score of 1, you'll see it's a very different stock, right? This is a stock that arguably has probably underperformed the market significantly over the past year. So a very different chart here, as you can see over the past year. This is a stock that has underperformed. This was a $30 stock a few months ago. That's now $11 stock. So that's why it's got a score of 1. So it's helping you understand not only the trends of a stock relative to itself, but how is it performing relative to the rest of the market.
That's fantastic. Thank you, Tony. So it's really important not just to pay attention to the number, but also which direction the aerial is going, what color it is, and that can kind of give you kind of a market at a glance look through your technical ideas and the watch lists. And maybe as a follow-up to that, when we're looking at the individual ideas under the trade window, here's a good example. Do you mind elaborating a little bit on that options play score that comes up for each of the plays? So maybe here's a good example where we've got one that's 106, one that's 82, and one that's 98. Do you mind elaborating a little bit on what makes a good score, maybe what can help earn that options play badge next to it?
Yes, absolutely. So the options play score is, the inspiration is actually from playing poker. And actually, there are incredible parallels between poker playing and trading because, what you're doing is you're basically taking trades. In poker, you're taking bets. In trading, you're placing trades. But everything has a probability and a risk to reward, right? Especially in options trading. Every single trade that you place has a probability of profit and a max risk and max reward. Very similar to a poker hand. You have a chance of winning the hand, and you have how much you're risking versus how much you potentially make. And you have to make a decision with that imperfect amount of information as far as whether or not you expect to have an edge or not. And a lot of times you might have option strategies that have unlimited reward or unlimited risk, which makes it impossible to calculate risk to reward. So that's why we created the OptionsPlay score. We wanted a way so that no matter what strategy you structure, whether it has a limited risk, unlimited reward, for you to be able to get a good sense for how does the risk to reward and the probability of profit balance out, right? Because you have strategies with very high probability of profit that is very poor risk to reward, and you have strategies with very high risk to reward of very poor probability of profit. How do you get a sense for how well balanced that is? And that's why we created the OptionsPlay score. And you don't have to pay attention to the score as much. They're color coded for you so that, for example, let me see if I can change this so that, okay, let me change this a little bit. So as you can see here, the scores change as you change your strategies, and they're color coded for you. So as you can see, this strategy here in the middle has a score of 78 and it's red. The score on the right here is 98 and it's yellow, and the score on the right is 106, which is green. So the red, yellow, and green reference, average expected outcome, so something that doesn't necessarily have an edge one way or another. Red means that the edge is actually against you. So this is a call option that's actually quite expensive. So overall, if you were to do this trade 100 times over, the probability is stacked slightly against you. And then the trades that have a green are where the probability is stacked slightly in your favor. So it gives you a good sense for where you want to, potentially trade or focus your attention in terms of trading. It doesn't mean that you can't trade something that's red, right? Because you still can potentially make money with the trade that is red in terms of probability of profit, but your chances on that are just less likely. Hopefully that gives you a better understanding of the OptionsPlay score.
That definitely does. I personally love the color coding. Makes it really easy to see at a glance which ones I want to jump into. And yeah, thank you so much for that detailed explanation there, Tony. We've got a few about how options play generates the idea. So if you don't mind elaborating a little bit, is it AI? Is it an algorithm? Is it a set of parameters that helps screen these technical ideas for us? Like what helps feed the ticker symbols and these kind of trade ideas into the platform?
Yeah, so these are all technical ideas. So these are based on technical analysis parameters. So we use, and you can actually, so for example, if you click on any of these ideas, let's go back to Fedex here for 1 second, right? We'll actually tell you which indicator we use to generate the trade idea. So here we use the CCI. So basically, it's showing you that the CCI is currently overbought and momentum are showing signs of a trend reversal, providing a good selling opportunity. So it'll tell you what the indicator was, what specific conditions. So in this particular case, it was overbought, and that's why we have a bearish view here on Fedex. So these are all based on technicals. These are based on pretty classic technical indicators. These are using standard parameters. We're not using anything fancy per se, right? Because from my perspective, as a strategist, your success as a trader is not based on kind of which parameters you use or which indicators you use. It's how consistently you trade and how you manage your risk, which is why I spent so much time focusing on risk management. But the trade ideas are scanned using technical indicators.
Thank you so much, Tony. That's really insightful. And I think I agree with you spending the time on the risk management aspect. I wish I spent more time on that when I started trading options about 5, 6 years ago. And I think every beginner, intermediate, and even advanced trader can still take something away from that. So thank you
Absolutely.
again for elaborating there. Maybe a follow-up question since technicals have come up a couple times in the Q&A, and that's to do with the chart in the middle here. Let's say I'm looking at these options play ideas and I want to do a little bit more of a deep dive on that chart. Is it possible to add additional technical indicators, things like moving averages or maybe a MACD and different kinds of studies on that?
Yeah, first of all, you can expand these charts so that you can look at this full screen. So you can even look at kind of a much larger screen. I'm zoomed in right now, so it doesn't look so great. But if you're not fully zoomed in to show the presentation, you get a much better view. But yes, you absolutely can add, there are, I think, 100 plus different indicators you can add to your screen. So if you want to add that moving average, you can easily do so. All of your indicators like MACD, RSI, Ichimoku, all available here on the charting platform.
That's fantastic. And maybe a little tip for the audience as well. If anyone prefers a more modular layout, something that's a little bit more customizable, I also highly recommend Edge Desktop, where OptionsPlay is also available. That way you can open up two different windows, two different tabs, have your chart on one screen, have your ideas on the other screen, and makes it a little bit easier to digest a huge amount of information at once. So thank you again for going into the chart there. And then maybe we'll finish off, since we're almost at time here, with a little bit of a fun question here for Tony. And that's the one that came up early. If Options Play is free, what's in it for Options Play to make this free to Questrade customers? I'm not sure if you can answer that one for us.
Just keep in mind, Options Play is free to you. It's not free to, meaning Questrade is effectively subsidizing your cost for Options Play for you so that you can access it for free. It's not actually free to them or to us, but it is a tool that's incredibly valuable. And Questrade obviously sees the value in it and is willing to subsidize the cost of it for you so that you have access to more tools at your, in your Questrade account. And it is the only Canadian broker in Canada that has access to Options Play for free. So I guess, maybe that helps make your decision as to who you're going to place your options trades with in Canada.
Thank you so much, Tony. I couldn't have said it better myself. I think, yeah, at Questrade, we definitely pay for the service, and I think it's a fantastic value add for our customers. Additional research tools. All of this is available for no additional cost to you, and it's part of the reason that I still love trading options here, and I love using the research tools that are available. So, thank you so much, Tony. That was a really insightful presentation, and I think we nailed a couple of those great Q&A questions. I apologize for everybody else on the chat here. I know we've got a lot of Q&A, but if we covered everything, I think we'd be here till 5 o'clock. So we will cap it off there. And as a quick reminder, the recording will be available next week. So if you missed the section, you want to go back and see what Tony was saying about a specific feature, please make sure to check that out on the Questrade website and our YouTube channel. And we'll also email it to everyone who registered. With that, thank you so much again, Tony, and have a great afternoon, everyone.
Thank you, Jonathan. Thank you, everyone.